I would push every penny that I can into that company to continue to grow the top line because your return on that is incredible. Hi, my name's Devin. Today I own several multi-million-dollar companies. We started with $5,000 in a credit card. I don't know the easy way. I only know the hard way. Hey everyone, welcome to the Whiteboard Entrepreneur Podcast, where I give straightforward advice to fuel the entrepreneur in all of us. I'm Devin Dickinson, and today I want to talk to you about a question that I get all the time, and it's, should I invest inside of my company or should I pull money out of the company and start investing, in the market or in real estate? And this is a very common question that I get as an entrepreneur because, we're all trying to, be savvy and make money. And also at the same time, we have a lot of our value is within our company. And so you hear that you should diversify, right? Because, hey, you don't want all your eggs in one basket. And in general, I think that's true because personally, I like to diversify, but there's always the question of, well, hey, if I pull money out of my company and put it into something else, is that wise? Because my company is growing at, let's say your company is growing at a 20% clip, and you're going to take your money out of your company and put it into something that's, maybe the stock market, maybe this year, well, gosh, we had a terrible year this year. I think it's down 14% to date, right? But typically, let's say you're going to take it out and put it in the market that's growing at 6%. Or should I go buy real estate so that I'm diversifying? Because I heard my buddy made a bunch of money and flipping a house or starting these other things. And I'm going to tell you, listen, there is no right answer for everybody. There is no one size fits all. This is really a personal choice and a preference and a comfort level from you. But I'm going to give you some principles that I personally think about when I'm making these decisions. And the principles that I do is, like I said, number one is how, is there value in diversifying? How secure do you think the company that you're in right now is going to continue to be in here doing business and doing well 10 years from now, 20 years from now? Is there anything on the horizon that could take your company out? Or is there anything on the horizon that could drastically reduce the value of your company? I would also say it's very important that you understand the equity value of your company. Are you building a company ultimately to sell that's going to have equity value? And why this is very important is, let's say that you're a service-oriented company, and a lot of times, service-oriented companies are great at kicking off cash, right? You're making a bunch of cash, but at the end of the day, when you go to sell, you might find that the equity value that you can actually sell your company for is significantly lower than other types of companies. And you might find that, hey, at the end of the day, I'm making a bunch of cash here, but at the end of the day, I'm only going to be able to sell this for maybe 1.5 times my profit or maybe 1 time my top line. And so it's very important that you understand that, because a lot of people, the reason why you want to keep your money in your company is to grow equity value. But if the multiple that you're going to get on your company is minimal, well, that means you probably want to try to extract the cash out and then begin diversifying in other things that will have a greater upside down the road. There's no point in putting cash back into a company that doesn't increase in equity value unless the cash that you're putting back in, like, hey, if I invest this $50,000 back into my company, right now I'm making profit of $300,000 a year. But if I invest $50,000 back, I can buy this new piece of equipment that next year I can make $400,000. Well, hey, that's great. That's 2x, right? But if you're investing your money back into your company so that you have a greater equity value, but at the end of the day, like, there is no equity value. You're only going to get, 1 time or 1.5 times your profit. I would maybe take that excess cash and put it into some other form of investment so that you have multiple streams of income. And maybe that other form of an investment will grow at a clip or at a better rate. In the scenario I talked about before, putting that $50,000 back in to make $100,000, well, gosh, that's 200. I mean, what is that? 2 times, right? Like that's great, right? As opposed to putting in the market and get it 6%. Now, I think there are companies that absolutely you want to keep every single penny that you can inside your company because it's growing like crazy. And these are typically companies that have a very high equity value. And so this is interesting because some of these companies, let's say you're doing 10 million in sales and the type of industry and your customer retention rate, and it's a SaaS, it's software as a service. And you think, holy cow, I can get 10 times top line for this, right? So you can get 10 times 10 million. So it's like worth $100 million equity value. That's amazing, right? And so I wouldn't even worry necessarily about the profit that you're pulling out. I would push every penny that I can into that company to continue to grow the top line because your return on that is incredible. So why would you even worry about taking money out, trying to be profitable and taking money out of it so that you can invest it in the market and make 6%? When everything that you invest back in grows your top line and you can get 10x for that. And so these are, like I said, the situations ebb and flow and change. The markets change. Me personally, most of the companies that I've owned, I've tried to grow at about a 15 to 20% clip year over year. But I'm going to tell you, if you're growing 10% plus year over year, good for you. Like you're doing great. But like I said, I typically set goals around 15, 20%. And then I also like to always make sure that I'm kicking off a little bit of profit. For me personally, this just makes it feel like it's a healthy business. 15 to 20% growth on the top line, call it 15, 20% on the bottom line. You're hitting the rule of 40s. Pretty awesome. And at the same time, you're pulling some money out so you're able to diversify, but you're showing a nice, healthy growth rate, a nice, healthy clip. You're building equity. And that personally is how I've run most of my companies. But like I said, this is very situational. If you're service industry and you're not really trying to build equity, let's take that profit, right? Like there's got to be a really good reason why you're going to sink money back in. If you're going to sink money back in, that profit better go way up. But if you're in an equity building situation and you're getting a really great multiple, keep the cash in the company, grow that top line, grow that equity value, and you'll have something really big, much, much better return than you could get in the market. This is very situational. And I will tell you this, what's true for you today might not be true for you 2 years from now, 3 years from now. As the competition changes, as your company grows and modifies, and even your personal situation changes, maybe your lending situation changes. So I think, like I said, I don't ever want to give you a one-size-fits-all answer. I think this is very situational, but it's something that you need to ask yourself often. Right? You need to always be evaluating your company to decide, hey, do I want to keep the money in the company to grow it, to grow that equity value, to potentially grow the profit at a greater rate than I could get in the market? Or do I want to diversify, pull it out, put it into something that has a nice return on the investment and also diversifies myself? I'm Devin. This is a whiteboard entrepreneur, and this is a really hard question. I would involve your spouse. I would involve others. I would involve people, friends and family that you trust, and ask yourself these hard questions and really give this thought, because you don't want to be putting all of this time and effort into your business and at the end of the day go, oh my gosh, what did I get for it? Dang, I wish I would have pulled that money out while I had. I could have and paid off my house. I wish I would have pulled that money out when I could have and put it in the market. I wish I would have pulled that money out when I could have and started another company. I wish I would have pulled that money out when I could have and bought a laundromat or some other form of income. And so these are the hard questions that entrepreneurs have to face. I'm Devin. This is a Whiteboard Entrepreneur, and this is why this podcast exists. I hope this helps. Take a quick moment and hit that subscribe button for more content.